Now, if you ever traded Orderflow in the past, you probably heard about Bookmap as it allows us to track the liquidity on the books. However, in today's video, I'm going to share with you guys an indicator that can show us that as we were bumping into this liquidity up here, there was a high probability the market was going to turn down. And then when we came down to this liquidity here, we could see the turn actually take place before price actually started rocketing up. All right, for those of you that are not familiar with Bookmap, let's go ahead and rewind real quick so you guys can understand exactly what you're looking at on your chart. If you look right over here at the bubbles, the larger the bubble, the more aggression to that side. So with a large green bubble, that means there's a lot of aggression to the buy side. Now, when we scroll down here, we see a large red bubble. There was a lot of aggressive selling on that candle. Now, aggressive selling doesn't mean we'll get continuation. Quite often, like we saw right here, as we come into that liquidity, that's actually where the market just barely starting to bounce. And then we have these horizontal lines streaking across the screen. The darker the red in color, the more resting orders are sitting at that price point. When I scroll this over here to the right real quick, let's look right over here at about 67.98. You can see we have 193 contracts. And then just below that, we have 84 contracts, 77, 70, 59, 72. Building a little liquidity wall. And then even up here where the market came up to and actually turned before we hit the liquidity just above us, you can actually see that we had anywhere from 103 to 52 contracts forming that liquidity wall just above us. Now, wouldn't it be nice to be able to know in advance before the market shifts and start to come back lower that it's actually getting ready to pull away from that liquidity? Or if we're building calls, trying to go ahead and bust that liquidity and continue to run to higher prices. Now, before I show you guys what the indicator is, I want to let you guys know right now, Apex is 70% off all the evaluation accounts. Best yet, only a $40 activation fee. Take advantage of this offer. Use the link in the description box down below. Use promo code Mike at checkout. So now let's go ahead and take a look at the free indicator within Bookmap that can help us identify if we should be looking to fade the move or potentially go ahead and look for that level to break. Well, if you come right down here on the bottom portion of the screen, it'll open up a sub panel. Now you're going to see the CVD indicator. It comes standard within Bookmap. However, a lot of traders fail to use it and fail to use it correctly. Now with the CVD, this stands for cumulative volume delta. And why this is important is this is starting to show us as the market's moving up, we want to see the cumulative volume delta also increasing. But look like what we had right up here. As we started to come into that liquidity level, notice we basically had the CVD top out right here at this peak. We came up another one time, two times, even a third attempt before the market went down. Now look at this third attempt over here. Look how much lower that CVD was versus where it was prior. This is another clue that the market's likely going to pull back. And the area we'd be looking for the market to pull back would be, where is the next liquidity right below us? We can see it's clearly anywhere from about 67.98 down here to about 67.95. And if we look, we started really seeing the clues. That is almost a 10-point move on the S&P 500. Now, I'm not saying you're going to get the whole entire 10-point move. I'm just showing you where the opportunities are. And if we can get just a small little piece of that, then I think, in my personal opinion, this can help out most traders. Now, if we scroll over real quick, I want to go ahead and dissect this a little bit, because as we start coming down, notice we have that liquidity here. And look at the cumulative volume delta. It's pretty much still going down. And then you can see as we get this big bubble right here, what do we see? We see a big decline in the cumulative volume delta. We go ahead and we take that liquidity, but let's go ahead and take a look at something. Notice we flush below this liquidity level. And what did the cumulative volume delta do? We have basically a double bottom pattern. But if we look at this a little bit closer, and I'm actually going to zoom this up just so we can see it a little bit better. And notice as price right here came down and took out the prior price point, notice, was the cumulative volume delta, did it go lower? Absolutely not. Then if we go back here a little bit further, notice we come down to that level once again. So we make almost an equal low to what we have right down here. Look at the cumulative volume delta. Look at the second time as we come back towards that same area. Notice the cumulative volume delta is absolutely screaming to the upside. And you guys probably guessed it. If we go ahead and fast forward, what did the market do? The market went screaming to the upside. So as we've seen this liquidity overthrown and we start getting back above that prior liquidity level and we have cumulative volume delta on our side, well, guess what? We have stacked the odds in our favor for a potential successful trade. However, just because the odds are stacked in our favor does not guarantee the trade will win. We can add everything stacked up perfectly and the trade could still skunk us out. But in this game, it's all about probabilities and we're trying to put the probabilities on our side. Now, if you guys like to learn more about imbalances and how to trade reversals or potentially momentum plays with it, make sure to watch one of these next two videos right here.